Going back to the major markets here, since we had a record close on the Dow and the S&P 500, let's break that down a little bit more for our viewers here. Joining us now is Michelle Schneider, who is the partner and director of trading research and education for MarketGauge.com. Michelle, always a pleasure to have you on the show and garner some of your insights here. Let's start with the NASDAQ sees the biggest gain on a percentage basis, while the Dow and the S&P 500 close at new records. Your biggest takeaways from today's session?
Well, we had the stimulus money hit the markets, and I think we still have a lot of optimism as a result of that. And the yields softened. So that was two big reasons why the NASDAQ went up, a lot of cyclicals in that sector. What I really hope to see from here is that it continues, because NASDAQ is one of those sticking points as the only index, not only nowhere near all-time highs, still trading in a caution phase in that it's under the 50-day moving average. So I'd like to see a little bit more follow-through. We have the Fed meeting this week. That could have an impact, although I don't expect him to say anything we haven't already heard a lot, but he might actually address the yields or not. And that's where big tech really has to keep eyes on, because those high yields increase the cost of carry, and therefore is one of the reasons why they sold off so much harder than, say, the small cap stocks did.
We're going to have a few companies that are going to be reporting earnings later on this week. We were talking about them towards the end of last week in FedEx and Nike that are going to be in focus, but especially if there's anything that you read into companies like American Airlines and Delta and their CEOs that have been commenting on the appetite of the consumer to re-enter the equation, book more flights for travel, for leisure travel specifically. What do you take away from the airlines, their executives, and what they're saying about the future of perhaps this immediate term future for travel right now, even though we are still having heavy guidance from healthcare medical professionals saying if you're going to travel, do so safely as some states start to reopen, at least in phases?
Well, vaccinations are going to be a big part of that. I can only speak personally here that I would love to travel, and everybody that I know who has already gotten their vaccinations are starting to think about it, and we're still a little bit on hold. So I think it's going to be very much on par with that. In terms of the sentiment, yeah, people are itching to go anywhere. What's so interesting, though, is that the travel is going to have to be pretty much confined to the domestic U.S. at this point in some of the surrounding areas, because Europe is having major issues. And at what point does that affect travel is hard to say. But for example, Italy is shutting down. I spoke with a friend of mine who lives in Paris, and they're still on a 6 o'clock curfew with the possibility of shutting down. So there's a disconnect there, and how that eventually affects the travel industry will be key. And also oil prices will be key. They've actually snuck up a lot, and gasoline prices have gone up to what they were pre-pandemic. So it's consumer sentiment versus all these other factors. And if we just look at what people want to do, yeah, people definitely want to get in a plane and go somewhere.
Yeah, perhaps the last thing that people want to hear, especially in the effort of reopening and vaccination acceleration, is what's old is new again when it comes to Europe, because that was the same case last year as foreshadowing exactly what was yet to come to the U.S. The main difference now, of course, we do know vaccinations, as you so rightly laid out, and so it's going to be interesting to track that acceleration of the rollout strategy and how it is able to curb some of the variants that have continued to be in the back of minds of investors, and that is something that is still very much a risk and a concern. Going forward from here, if you were to look at some of the sectors that still do have opportunities for growth, even amid this, where are some of those growth opportunities that you have been telling your readers, your educational readers and your investors about?
Well, there's still a bunch of opportunity in solar stocks, which got pretty well beaten up on this last correction, and they're now just starting to show some strength after they made new lows a couple of weeks ago. When I say new lows, not all-time lows, but recent lows. And then also I'm still looking at the cannabis space, which is forming a nice base here. MJ, the ETF, is looking pretty good. If it just goes up a little bit more, it'll break out of a major weekly moving average. I still like big data. My eyes are there. Those stocks also got hit very hard, like Datadog, for example, coming back. And really, I think one of the major things that I'm looking at right now is the electricity distribution, because even though we've taken a hit with electric vehicles and those are coming back as well, Musk himself said that the electricity demand is going to double and possibly even triple. And I'm really curious to know what are the companies that are going to be able to provide and meet that demand. And so we're looking at some of the utility companies and some of the other types of electrical companies that are working on that. There are other things too, but I think those are my major focuses in terms of opportunity, along with transportation, again, on a big if we get some kind of an infrastructure package.
Certainly. Okay, so since you mentioned infrastructure, when it comes to infrastructure, what do you believe needs to be passed to help add to some of the market sentiment that we've continued to watch, at least for the Dow and the S&P 500, even despite this most recent pullback in the NASDAQ?
Well, Brad, I don't know if you know this, but we are 38th in the world in terms of infrastructure. That's pretty sad when you think about the fact that the United States is a great industrial nation. And we've heard talk about $3 trillion towards infrastructure passing. It probably will run into resistance, and whether or not we can get some kind of a bipartisan agreement will be the first time we've really seen anything significant in several administrations. So we would love to see that pass because we need it. Our roads, our bridges, our airports, our railroads, are inferior. So I think that there would be a double-edged sword, not only from the political standpoint, obviously, of getting it passed, but if it does get passed, it adds more government spending, which, of course, now the big buzzword that everybody's looking at, myself included, is what happens if we get into some kind of an inflationary situation. But I'm much more concerned about the GDP not growing after everybody comes back and is happy and pandemic is behind us. I'm worried about how we're going to get the economy to grow from there, because we were kind of limping along. And I think infrastructure is really going to be one of the biggest ways to do that.
Okay, and so with regard to GDP, expectations for GDP growth, at least from Goldman Sachs, 8% for 2021 in the U.S. How does Wall Street price in these particular predictions from reputable firms like Goldman Sachs even?
Well, I think they're actually sort of pricing it in, which is why we continue to see the new highs, even though there has been a concern, obviously, about the economy overall and its fragility. Once we get back to work, there's going to be businesses that will never come back. Where that GDP number comes from is very, very lofty and very optimistic. But what is going to make the economy grow? Industrial manufacturing, yes, is coming back, but is it going to come back from what we saw before the pre-pandemic? Well, possibly, because we have certain changes administratively. We're not as worried about trade war, for example, which could impact things. The dollar is going to be a factor. Interest rates are going to be a factor. There's so many things that are going to go into what makes the GDP grow. But the two simplest things to do, really, is to get people back to work, working on infrastructure and everything that goes along with that. And actually, I get back to cannabis because that, too, would create a lot of job opportunities in all of the sectors that are surrounding the cannabis industry, not just the growers and the sellers.
Michelle Schneider, who's the partner and director of trading research and education for MarketGauge.com. Michelle, always a pleasure to have you here on the show with us. Thanks so much.